Yeah. 2. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the bro days, then a slow praise. Thinking it'd be different, it would gon' change, then it really didn't. It's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't a topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the
Why they party? I'm in here grinding. Money I'm stacking. Why they rock diamonds? I can't relate to them, ain't my chick calming. I set a goal for me, 2 or 3 commas. 7 figures, 8 figures to 9 figures. On a slow pace to get rich quick. Same time we just think different. Cause when you make it, it hit different.
What's good, guys? It's your partner looking old, so fresh, so clean. And again, guys, welcome to another edition of the Countermoves Podcast on Thursday at 8:30 p.m. Thank you so much for blessing me with your time. So if you could, guys, before we get into the show, could you, no matter what platform you are, share, and like and subscribe. And I think today you're gonna really like this topic today. As everybody knows, we are in midst of the election season, really the presidential election. You have some House and some Senate races going on, but really the lion's share of the attention is on the presidential election. And this show is not endorsing any type of candidate right now. We are doing what we call vetting the candidates. I believe last week we went through President Donald Trump's tax plan. Right, we went through that thing, right, line by line, which was pretty cool. And we've gotten a lot of feedback on that presentation, some good, some not too good. And that's fine. You're entitled to your own decision making, entitled to your own opinion. But at the exact same time, we got to make sure we actually balance the playing field. So today, we're going to take a look at Vice President Kamala Harris's tax plan, guys. Now, if you could, guys, before we dive into her tax plan, she actually did a interview on a very reputable network, and she's talking about her economic plan, and then that's going to bleed right into her tax plan. So we're going to dive into this real quickly, guys. Here is the Kamala Harris interview that she had with 60 Minutes. I wanted to kind of let her speak for herself so we can then walk through her tax plan again, line by line. Okay, so let's dive into this. This is a brief snippet of her presentation of her tax plan. Let's see what she has to say real quickly, guys, and then we'll dive into the tax plan she actually presented. Here we go.
My plan is about saying that when you invest in small businesses, you invest in the middle class, and you strengthen America's economy. Small businesses are part of the backbone of America's economy.
But pardon me, Madam Vice President, the question was, how are you going to pay for it?
Well,
Great question. So whenever you hear the verbiage of investment, that means money is being exchanged. So this is a great question by the interviewer saying, how are you going to pay for it? Where's the money coming from? Let's see how she answers.
one of the things is I'm going to make sure that the richest among us who can afford it pay their fair share in taxes.
So right there, she's saying that the reason why, how she's going to pay for it is she's making the claim that the top 1% of the wealthy are not paying enough in taxes. And what she's saying is by positioning them to have to pay more in the more of a higher tax bill, right? This will infuse enough capital to pay for her plan. Let's keep going.
It is not right that teachers and nurses and firefighters are paying a higher tax rate than billionaires and the biggest corporations.
But
I plan on making that fair.
But we're dealing with the real world here.
But the real world includes...
How are you going to get this through Congress?
Good question.
You know, when you talk quietly with a lot of folks in Congress, they know exactly what I'm talking about because their constituents know exactly what I'm talking about. Their constituents are those firefighters and teachers and nurses.
So right there, guys. So now what we've seen is we've seen her go through a presentation on, she's saying that the reason how she's going to pay for it is she's saying that the wealthy, the top 1%, let's just say classified as the wealthy, are not paying their fair share. I noticed something that she did not communicate a number at all there. Okay, if you're saying that the wealthy is not paying their fair share, what is the fair share? That's a logical question. What's the number, right? And guys, typically when it comes to this topic, when I've kind of sat down and listened to her talk and other politicians talk, as well as people that actually are for Kamala Harris's plan, which is okay. When I bring up the question of fair share, they can never give me a number. Number two, the lion's share of the discussion is around income tax. Now, last time I checked, there's more tax categories than just income tax in the tax code. But when it comes to this fair share number, they are primarily talking about the income tax itself. And really quickly, guys, newsflash: the wealthy and let me step back real fast. And the income tax revenues or taxes are tax on W-2 workers, right? More employees. They're getting their income, the lion's share of it, from a salary, right? Via W-2. And if that is the lion's share of this fair share argument, it's a flawed argument because of the fact that the wealthy don't make their money in W-2 income. They make their money in investments and dividends. That's how they normally do that. That makes some sense, guys. So, man, I hope this helps you out, guys, but I wanted her to be able to say exactly what her plan is. And also you'll see some little bit of some pushback there. Now, guys, we're going to dive right into her tax plan. All right, guys. So here we go. All right, guys. Now that we've kind of heard from Kamala Harris, her economic plan, and also some questioning concerning how she's going to pay for it, and she pointed toward the wealthy not paying their fair share in taxes, I thought it would be important for us to look at her tax plan, right? Literally from her, I believe, her website, because she actually published it out for everybody to kind of read, digest it. And I thought that it'd be wise for us to begin to look at that in a deep, detailed analysis. And I thought it'd be pretty cool to bring my good friend, my partner, my man's in there, Patrick Bit David. He actually did a really good presentation on her tax plan, and we go through it line by line by line, and you're going to begin to see if what she's saying on TV and interviews matches her tax plan, right? You're going to begin to see how much it costs, the tenure, the time frame as well, also of these projections, and if it is just targeting, if it's just going to affect the wealthy, the middle class, or the poor. You're going to see all this, and also the corporations. You're going to see her entire tax plan here in a second. So let's go ahead and dive into her tax plan, guys, and then we can kind of sit back and reason together to see exactly, hey, what seems to be the issue, what should not be the issue. But again, let's dive into this, guys, and then I'll get my thoughts on the other end. Here we go.
Elections have consequences, right? And this is what happens if Kamala Harris becomes a president. They have unveiled their tax plan of how much money they're going to take from you, and it's going to go to the U.S. government. By the way, when you hear this tax plan, we're going to break it down. Most people don't have time to go through this. We will in a very fast way, because here's what's going on. The constant narrative you hear is the wealthy don't pay their fair share in taxes, right? Yeah. It's the poor that pay the taxes, but not the wealthy.
Do you see how he's beginning this? He's literally taking what she said on interviews about the wealthy not paying their fair share. Let's unfold this a little bit more. Here we go.
Watch this. Bottom 50% of taxpayers in America versus the top 50%. What percentage of all the taxes in the U.S. do you think the bottom 50% pay? You ready? 2.3%. You know what the top 50% pays? 97.7%. Now you may
Stop right there. And I have to correct myself because I was on a TikTok live a couple of days ago. It was my own live, and I misquoted some stuff on a chart. So I will correct that in a second. But I want you to understand what he just said. Is if you look at all of the tax code, all of the taxes itself, not just the income tax, which is where the lion's share of this discussion is normally hindered on, is when they come and talk about the fair share, is the income tax. He's talking about the entirety of the tax code, all the taxes. 97% is paid by the top 50%. And the bottom 50% pay 2.3%. Wow. Bet you ain't heard that number before. We're going to walk through this in a second. Here we go.
say you're a Kamala person. You may say, well, Pat, how about the top 1%? It's
question.
the top 1% that's not paying any of the taxes. Right. Really? Here's a chart for you. The top 1% pays 42.3% of all the taxes the government gets. So what the hell is this narrative about the fact that rich people don't pay their taxes? By the way, very simple question you got to ask. This unrealized gain, capital gains that they're talking about on what's going to happen to people over 100.
So stop right there. So the top 1%, and this is the chart I was talking about, the top 1% pay 42% of all the taxes, not just income, all the taxes. So, I'm gonna give you my thoughts after this, but I want you to hear what he's saying. These are numbers. All right, we're gonna walk through this. Here we go.
$100 million. We use ChatGPT to find that if this were to pass, how much a lot of the wealthy people like Musk would have to pay just in unrealized capital gains. We'll show you the number. But the main question you have to answer is the following. Would you rather have all this money go to the government and see how they handle the money? Maybe it'll end up in Zelensky's hands. Or would you rather have this money be in entrepreneurs, job creators like Musk that continue to reinvest into the companies and grow? Who would you rather trust that money going to? We're going to talk about...
So now, you as a voter, those are two great questions. You as a voter, what do you prefer? The government, the money going to the government, and you trust them to disperse the capital, or the money staying in entrepreneurial hands like Musk as well as yourself, and then you steward your own resources in the way that you see fit. Let's keep going.
All of this stuff today. Okay, so if you get value out of this video, give it a thumbs up and subscribe to the channel. And before we go through the entire tax plan Kamala has, let's look at a few different things. Number one, yourself. If you own stocks, if you have money in the stock market, as of July 1st, 2024, the market cap of U.S. stock market was $55.2 trillion. In the last 30 years, the return has been roughly the S&P 500, 10.7%. 158 million Americans own stock. That's 61% of adults. The top 1% owns 54% of the stock. The top 10% owns 89%. The bottom 90% owns only 11%, but the bottom 50% only owns 0.6%. So they don't have a lot of money in the market. Now watch, this whole thing, when you look at the source of income by AGI percentile, this income source for people doing their returns, it's all returns, then you go to the top 1%, top 0.1%, et cetera, et cetera. Blue represents wages, yellow is your investment, gray is retirement income, and orange is business owners. So if you focus on the 0 to 80%, that's the bottom 80% of earners, right? Most of their income, nearly 80% of their income comes from wages. Small portion comes from retirement, that could be Social Security, 401k, and annuity. Very small percentage comes from their investment, and then you got some from their business owner side, the orange. But go to the top 1%, right? That's the 99.99.9. Half is wages. Then you have a little bit from retirement. Look what happens to the yellow. That's the yellow, the investment they want to target. Then you have business owner, right? Now go to the top 0.001%, all the way at the bottom. These are the billionaires, right? Very small is wages. Majority is what? Is investment. You don't even find anything on retirement. And then you have business owner. That yellow is what they want to target. That's called the unrealized capital gain.
Do you see what I mean? Whenever you hear the verbiage of the wealthy not paying their fair share, there's two questions you should be asking. Number one, what's the number? And number two, is the lion's share of your argument around income taxes? Those are the top two questions you should be asking. This chart is brilliant because it actually shows the top 1%, as what they talked about. Very little in wages, which is W-2 income. The lion's share of their income is through investments, dividends, returns, right? And then there's none in retirement. None. But do you actually see where the lion's share of their income comes from? It's from dividends from their investments. Keep going. And what he's saying is that lion's share there, that's where they want to tax what they call unrealized gains. Listen, here we go.
Gains for many. And so if you look at it and say unrealized capital gains, what does it look like? Here's a basic chart to look at. Okay, this chart here tells you in 2022, we don't even have the 2024 numbers. We're just going to look at 2022. Red is unrealized. That means taxes haven't been paid on that. You bought something for $100,000, a stock. Now it's worth $1 million. The $900,000 that you haven't paid taxes on, that's unrealized gains.
Correct.
That's how much it's not been taxed. And even if we break it down a little bit more, this may give you a little bit more context. From 89 till 2022, $19.5 trillion of capital gains is realized and has been paid taxes of $3.4 trillion. The 48.2 is unrealized. The government wants to tax that. That's what Kamala Harris wants to do. They want to tax the unrealized gains. So again, before we go through the Kamala thing, the main thing I want you to think about is the following. Kamala Harris proposed a billionaire minimum tax target. Individuals with a net worth of $100 million or more, requiring them to pay a 25% tax on their unrealized gains.
Stop right there. Notice the word net worth. Notice it didn't say income. It says net worth. How do you begin to judge net worth? Easily. Look at your balance sheet. That's why he's talking about unrealized gains at 25%. It gets better. Here we go.
Profits on assets that haven't been sold. So you own the stock, you own this company, you haven't sold it. The money hasn't come to you. It's sitting there. It's paper rich. She wants 25% of that to be taxed. So we asked ChatGPT. This is what ChatGPT told us what it would look like if they, by the way, we put the entire tax plan in ChatGPT. That's her plan, from her words, their group. And we said, if this was the case, how much would Musk, Bezos, Gates, Arnold, all these guys, what would they pay? This is what ChatGPT told us. Musk's unrealized gains is $92 billion. He would have to pay $23 billion of that unrealized. Bernard Arnault has $17 billion. He would pay 4.25. Jeff Bezos would pay 17.5. Gates, $8 billion. Ballmer, 11.3. Zuck, 20.6. Page, 10.7. Ellison, 7.8. Sergey Brin, 10.1. Warren Buffett, 3.2. Now, you may say, who cares? These guys can afford it. What's the big deal? Why are you protecting these billionaires? That's not the point. You ready? Let's say you're 62 years old and you have $700,000 in your 401k. You're getting ready to retire in the next 3 to 7 years, right? All of a sudden, this becomes a law. And billionaires' incentive is like, wait a minute, I have to pay this much taxes. Yes, guys, we got to lay people off. We got to fire people. Who? A quarter of the entire employee. We're firing everybody. Are you serious? Yes, because I got to find a way to pay these taxes. I don't know how to do it. I'm going to go broke. Well, that's not fair for you to do this. I have to do it. Boom. The market reacts. All of a sudden, the market tanks 50%. You're 62 years old. You had $700,000 in a 401k. You were hoping to retire by 7 years old, maybe 65 years old. That $700 becomes $350,000 overnight. How much longer do you think you have to work? Oh, it's not going to affect average middle Americans. We're only targeting the wealthy, not average and middle America. Really? Really?
Stop right there. For those that believe that this unrealized gains is not going to harm the middle class, he did a phenomenal presentation on how it will, because your retirement is invested in those companies. And just like in 2008, I had people calling me when that debacle was actually happening. People's 401ks, IRAs were gone overnight. Half of it's gone. He walked through a brilliant potential reality on this unrealized gains play, which will affect you, the average American, not based on our opinion, based on the numbers. And for those saying, well, it's saying that Elon Musk is has to pay $25 billion. He's worth $92 billion. He has the money. Again, terms and definitions, guys. His net worth is $92 billion. That doesn't mean he has $92 billion in cash sitting in the bank. That is $92 billion on paper, on the balance sheet, in valuation of his companies. That's not cash in the bank. Let's keep going.
What do you think these guys do? You think when the money comes in, they just go buy exotic cars that reinvest into the company? How do you think a company gets bigger by itself, or somebody risking constantly reinvesting? They're delaying the outcome of them taking money off the table. That's a lot of risk when you have paper wealth. So somebody could be worth, there was a time on paper, I was worth a couple $100 million. But in cash, I was only worth $5 million. So you are so rich on paper, but if this thing goes out of business, I'm not worth $200 million because we kept reinvesting. So now let's go and look at this thing, because instead of just...
He's correct. That was reality at one point for me as well also. He's correct. A lot of real estate investors, guys, we own a lot of real estate, and also private equity investors, a lot of companies that we invested in. So our net worth goes up, right? We have a really good balance sheet, but our cash maybe $1, $2, $3, $4, $5 million in cash, right? Because we want to make sure that we can actually perform on different investments, because we're deploying capital into other companies. We're reinvesting the capital. So if we get a dividend at the end of the year, we will, because we want to scale the companies, make it bigger to employ more individuals, more people, right? Pay higher wages. We reinvest that capital back into the company so that we can scale that company bigger and bigger and bigger. That's how we have the AT&Ts and the Verizons and the Apples. There was a reinvestment of dividends back into the company that allows for it to scale up to employ more individuals. All right, here we go.
Looking at all these numbers, let's see how much money Kamala and them are going to be getting. So if you look at their chart, okay, this is again from taxfoundation.org to look at. Here's what you'll come up with. I want to go through all of them, and then I'm going to show you what the total number is at the end. So one by one. This is just for individual revenue raisers for taxes to the government. Raise top tax rate on individuals to 39.6. If you go all the way to the right, you'll see from 2025 to 2034, that's going to generate them an additional $170 billion in 10 years. Next one, tax unrealized capital gains at death over $5 million. Impose a 28% tax rate on capital gains over $1 million. Now,
right there, I want you to read that. It says tax unrealized capital gains at death, right? At death, over $5 million, and impose a 28% tax rate on capital gains over $1 million. I thought it was just $100 million. I thought it was just for net worth individuals for $100 million. Again, here's a line item in a tax plan for those that, unfortunately, when they pass away, they're paying a 28% tax rate over $1 million. That includes your house, your cars, or any other asset that you may have. Again, I thought this was for the top 1%. This is her tax plan. Let's keep going.
Another $171 billion. Expand a net investment tax base to active pass-through income. Another $257 billion to the government. Raise the net investment tax income from 3.8 to 5%. Another $125 billion. Raise the additional Medicare tax from 0.9 to 2.1. Oh, middle income's not going to pay for it. Who the hell pays that Medicare tax? Only people making over $400,000? Everybody does.
Stop right there. Medicare tax. Doesn't that come out of your paycheck? Each time you get paid your wage, right? That didn't come out of your paycheck, right? Again, I agree with him. I thought we were going off the top 1%. Everybody pays Medicare that's getting a W-2 wage. Talking about you. Let's keep going. This is our tax plan.
That's another $258 billion. Make permanent the limit on excess business losses for pass-through firms. Another $20 billion. Next one, 1031 exchange, $500,000 in gain, $20 billion. Tax carried interest as ordinary.
The 1031 exchange, that's for you, real estate investors. It's for you. Hello. Those mom and pop real estate investors, those mid-tier real estate investors that exist on flipping properties that have to do a 1031 exchange. There you go.
Income, $6.7 billion. Create new limitations on high-income taxpayers with large retirement account balances and increasing minimum required distribution and miscellaneous tax increases on savings. Another $63 billion.
Again, I'm stopping, guys, because I want you to see, because Patrick talks pretty fast, but it's all good. Let's read it again. Create new limitations on high-income taxpayers with large retirement accounts. And increasing minimum required distributions and miscellaneous tax increases on savings. This is targeting your retirement accounts. Hello. We just saw a chart at the beginning of this presentation to where the top 1% had zero in retirement accounts. So I thought this was just for the top 1%. Let's keep going.
$1 billion. Tighten the state and gift tax rules, another $94 billion. Miscellaneous tax increases on pass-through reforms, another $2.1 billion, for a total of what? Roughly $1.2 trillion just on individual revenue. That's you, okay? That's one.
Individual, one person, personal. Again, I thought this was for the top 1%. We haven't got to that yet. Keep going.
1.2 trillion over 10 years. But let's continue. Here's corporate revenue raisers. Corporate taxes, let's raise it to 28. $882 billion over 10 years goes from companies to the U.S. government. Next.
Stop right there. Right now, the current corporate rate is 21%, right? She wants to raise it up to 28%. Now, what I hear a lot of individuals tell me is, like, that's going to incentivize for corporations to reinvest in their companies. Newsflash, we already do that currently. We don't need any additional incentives from the government to reinvest in our companies, to scale it. Our vision, our purpose is to scale the business for it to become bigger. The bigger the company, the higher the net worth goes up for the investor. We don't need the incentive from the government to reinvest in our companies. Now, will we take it? Sure. We don't need it. And please tell me, how does a higher tax rate welcome in capital to be invested? Would you invest in an environment where the tax rate is higher or lower? I'll wait for you to answer that question. For me, I want a lower tax environment that invites in capital to be raised, guys, to be invested. Very simple to do, not hard.
Next, raise corporate alternative minimum tax from 15 to 21, $346 billion. 21, wow. GILTI minimum tax rate and other GILTI changes, another $278 billion. Repeal FDII, you got $92 billion. Section 265, $187 billion. 4% excise tax on stock buybacks, $79 billion. Modifications to 162, limit on deductions of excessive employee remuneration, that's another $265 billion. Miscellaneous corporate tax increase, $34 billion.
Let me stop right there real fast. Another type of thing that I got was on corporate buybacks. And people were saying, well, there's a lot of corporate buybacks when it comes to this type of situations. I agree, there are a lot of corporate buybacks. But again, that's a normal operating procedure for companies. Those are Fortune 1000 companies. Fortune 1000, Fortune 500 companies, they are doing a lot of corporate buybacks. That is normal. That is normal. I'm confused. Again, trying to scare individuals with bad information when you should be saying what's normal for companies or corporate buybacks in the proper context, right? And reinvestment of capital into the company to grow it. That should be the honest dialogue here, not withholding information and saying that something's going to happen and get people scared of what's going to happen. That didn't make any sense at all. Corporate buybacks are normal when it comes to corporations. Do I agree with it? It depends on the context. But it's a normal operation of a company.
For a total corporate revenue of how much? Another $2.1 trillion. So far, we're at 3.4 trillion. Now, here's other revenue raisers, right? Impose a 25% minimum tax on unrealized gains for, boom, this is the one with $100 million. Look how much it raises. 500.
Look at that, guys. It's in a tax plan. I want to read it. Imposed a 25% minimum tax on unrealized gains for taxpayers with a net worth of over $100 million. That's right there in a tax plan over a 10-year period. And look at how much money it raises, $516 billion.
$116 billion. You know what they fear? A guy like Elon Musk becoming too wealthy and buying companies like X, buying companies like, whatever other things he's going to buy. They don't want that kind of control. They want the government to have that control, right? Levy on under-tax profits, rule on large, $225 billion. Changes on tax compliance and administration, another $24 billion. What's the total here? $766 billion. Wow. You know what the total number is? $4.1 trillion over the next 10 years. You know what the question?
That is a tax increase of $4.1 trillion. Are you okay with that? So your taxes are going to go up, not just on corporations, but also on you, individual taxpayer. That's not in the top 1%. Not based on my opinion, her tax plan. Let's keep going.
I have for you is that $4.1 trillion over the next 10 years. Who do you trust to do more with that money? The U.S. government or free market, people that are job creators, entrepreneurs? Who do you think will do more with that? The U.S. government, when they decide, let's send $200 billion, $100 billion to Zelensky, Ukraine. You may disagree. You don't have a choice. You don't have a choice. You can't be like, I don't like that. They take certain money and they waste it. We're going to put all these battery plants, we're going to invest $500 million. They got 7-8 locations in the span of how many years? They waste all the money. But it's like $500 million. Oh, you know what we're going to do? We're going to be able to take money back because it's not quantitative tightening is what we're going to do. So we're going to buy back $200 billion every month. How are you going to do? We can just do that. Who cares? We can just do that. So if you can manipulate in those areas, why are you trying to take $4.1 trillion away from our hands to the government?
Correct.
Do you really think that's good for you and your family? You really believe that? You think that's good for the economy? You think that's good for your 401k? You think that's good for your retirement plan, pension plan? You think that that's what they're trying to do with this plan. $21 billion. By the way, if you want the Kamala tax plan, just text us the word taxes to 310-340-1132. We'll send you the link. Again,
do that, guys. Text Patrick. Get a copy of this. Read it for yourself.
Taxes to 310-340-1132. You'll see it yourself. And by the way, do you know how they manipulate you with this plan to get you to think like this is a good idea? They're like, majority of the people agree that we should tax the people over $100 million unrealized tax. Of course, it's not their money. Is that supposed to persuade me? Is that supposed to get me to say, oh my God, you're right, because majority agree? Oh yeah, for sure. Imagine I got 6 people living in the house, 4 kids, me and my wife, right? Imagine my oldest son comes and says, well, Dad, majority of people in this house agree that we should eat ice cream every day. No shit, Sherlock. Majority of people in this house are kids. Or imagine these guys are now 18, 19, 20 years old, and they say, Dad, majority of the people in the family agree that we should not pay rent and we should live here. Of course, majority would agree on that because majority are not contributing towards the lifestyle and the costs and the expenses. That's why they would agree on that. So we can't fall for that trap of majority of the people agree on this plan, et cetera, et cetera. They've been doing this for a while, but a plan like this would destroy the U.S. economy. There's a part of me that thinks they use this to scare the crap out of everybody, and then they go behind closed doors to all the hundreds of millions of dollars that they're getting from these billionaires, and they say, listen, these idiots, these low and middle income families don't understand how taxes work. Trust me, Kamal, I don't even know how it works, but they definitely don't know how it works. But I can fool them and scare them that I'm going to come back for you. I'm not. But when I say that, please don't feel bad about it. Just know that I'm still with you, right? Because of course I love my billionaire friends, because I need your money. Without you, I'd never get elected. Fair? Cool. All these billionaires, terrible people that I have dinner with every night. Oh my God, it's so uncomfortable when they pay for my foie gras and my Kobe beef and my all this other stuff, right? These are bad people. In front of you, they're bad people. Behind closed doors, they're kissing their ass because without them, they don't get reelected. You gotta pay attention to this because it's your money, your kids' money, your family's money if you don't pay attention to it. If you want this in...
So, guys, man, phenomenal presentation by Patrick concerning Vice President Kamala Harris tax plan. Spot on, guys. And I'll say this here is that's her entire tax plan. Every single line. You read it. I implore you, text that number that Patrick put on the screen. Text it. Get a copy of it. Read it for yourself. Right? Digest it for yourself. Pass it along, guys. You'll be alarmed at how much you can learn just by reading someone's plan to see if what they're saying in public matches what they put on paper. The devil's in the details, guys. It's very simple.
Man, let's keep it 1,000. You are concerned about what's going on with this economy. I know I would be, man. You have the stock market not doing too well. You have inflation outpacing wages right now. And you have major companies looking at laying off a lot of people. Man, I had a friend of mine whose wife works for a major pharmaceutical company, and they're talking about laying off scientists, man. Scientists. It's getting real out there, guys. But hold on, wait a minute. It's not the end of the world for those that actually have a counter move. More than ever, it's time for everyday Americans to begin looking at a side hustle, a business for them to begin building now, and for them to be able to have the ability to pass the business on to second and third generation. Now, what business model is best for you? That's a great question, and the only person that can answer that question is you. The good news is a good friend of mine, Matt Sapala, actually did a good presentation on presenting the passive income blueprint. 3 effective ways to generate $1.5 million in passive income. The most powerful word in business is cash flow. And even a more powerful word is passive cash flow. I know because I've been able to live the life of my dreams because of passive income. Most individuals focus on commission-based, generating commission. What if you can actually generate $1.5 million in passive income that can change not only your life, but generations to come, guys? Click on the link below or swipe up, guys, and I think you'll be blessed with what you see. God bless you. See you on this side.
All right, guys, here are my thoughts concerning us walking through Vice President Kamala Harris's tax plan. I like to say their title because we got to honor that them actually have a title. So I say Vice President Kamala Harris. I would say this here is the presentation that Patrick just laid out was spot on. It made total sense, and it directly conflicts with what Kamala Harris detailed in her 60 Minutes interview concerning her economic plan. Her plan typically doesn't have a lot of details when she's presenting it, and that's fine. She's presenting a conceptual presentation when it comes to her plan. But that's why I say, guys, text that number so you can get a copy of her tax plan and walk through it. It's very evident to see that the presentation of the dialogue of the rich don't pay their fair share, the top 1%, is inaccurate because her tax plan does not only attack the top 1%, it attacks you, the middle American, that plumber, that worker at the big corporations, the attorneys, the professionals. That attacks you too, not based on my opinion, based on what we just saw in her plan. It's extremely simple to see. Now, I would say this here. When it comes to politicians, no matter if they are a Republican or a Democrat, they're telling you a story when they are being interviewed. And that's great. Tell the story. It is up to you to vet and see if what they're saying is accurate. I can tell you right now, Kamala Harris's plan would destroy the economy. Let me tell you why. Investors want to invest their capital into environments that will yield a greater return. A tax is an expense. By its design, it is an expense that some investors don't even prepare for, or the taxes, right? And so when it comes to high tax environments, and I know it depends on the context, it's logical to conclude that I and other investors are not going to want to invest our capital into higher expense and or tax environments. We want environments that are lower in expenses and or taxes so that we can get a greater rate of return, so that we can reinvest our capital into the business to begin to scale it. A lot of the times, guys, whenever I make an investment into a company, or any investor, this private equity or venture capital investor makes an investment into a company, we may not see a dividend for 3 to 5 years, sometimes even 10 years. Why? Because of the fact that it's a balance sheet play. We're not investing into the company to yield a W-2 income. We're investing in the company to yield a dividend, right? And to increase our balance sheet. Let me give an example. You understand that when Jeff Bezos bought the Washington Post was losing money, and they continue to lose money on an annual basis. They're not a for-profit scenario. Also, when it comes to Twitter right now with Elon Musk, Twitter is losing money right now. They're losing money. Why? Right? Why would an investor do that? It's easy. It's a tax write-off play. but also it's an influence play as well at the exact same time. You see what I'm saying? Because we make the lion's share of our income off of our investments, not W-2 income. Therefore, we pay a lower income tax rate because our income doesn't come from a W-2 income. It comes from investments and dividends. Two different income, two different tax brackets. I'm sorry, not brackets, categories. Forgive me. Two different tax categories. So, again, the two questions you should be asking any a politician that's asking for your vote, because really your vote is an investment. It's literally an investment into somebody so that they'll be making decisions that actually affect your life. Does that make sense? It's real simple. It's not hard. Now, two questions you should be asking is, number one, you keep saying fair share when it comes to the wealthy. What's that number? And wait for their answer. If they answer with some type of number, right? Then the next question should be, okay, are you talking about the income tax or taxes as a whole, every category of taxes? You'll begin to see them squirm because now they know they've been caught. Again, you as a voter have to become more wiser, do more research, because as a man thinks in his mind, so is he. Does that make sense, guys? The faster you transform your mind, the faster you become more wiser, and the faster you can begin to discern if you're being fleeced or deceived or not. It's extremely simple. And I can tell you, not based on my opinion, based on other professionals that I know, other investors that I know that have gauged this tax plan of Kamala Harris, this would severely wound this economy because this tax plan yields a bigger government, which means higher regulations. Regulations and taxes are expenses on the profit and loss sheet when it comes to any corporation. It's simple. It's not hard. The higher the taxes, the higher the regulations, the higher the cost for the business, which means the higher the cost for the consumer, because that cost is passed on to the consumer. You see how that thing works? It's not hard, guys. It's simple. Any cost that is given to a corporation is passed on to the consumer. That is a fact, because it's something called a profit margin. A profit margin means, okay, what is my price minus the cost of goods yields me a profit margin of X. It's real simple. It's not hard. So, guys, I hope this helped you out, guys. I hope it did. This was very informative for me because, again, last week we went through President Donald Trump's tax plan. We went through it with another professional tax strategist, walk through it, and it was pretty good. If you want to, go look at that video. Right, it was last week's Countermoves Podcast. Go look at it, guys. Now, I'm always asked because I look fresh, cold, clean, guys. Hey, Dale, can I get some of your swag? No problem with it, guys. You can order the bag merch, baby, at the link below, right? Or what you can do if you're on Instagram or if you're on YouTube or if you're on any platform, guys, Rumble, you can also scan on this QR code as well to get your merch. Again, the bag merch. Also, guys, I'm always asked a lot of the times, hey, Dale, when it comes to real estate, how can I begin to make money in real estate to the point to where I can begin to begin a side hustle, right? Because I'm also in real estate development finance. And I'll say, guys, I'm rocking with you. Here's my philosophy when it comes to real estate, because real estate is a very complex arena. If mentorships, right, or discipleship, walking with a mentor is the best way to begin to go from 0 to 6 figures in a fast amount of time. So, because I'm always asked if I could train someone in how to invest in real estate, the answer is always yes. But I think we have created a better way for you to be able to learn. If I can teach you how to find a distressed property in your city, right, which is locate, vet the property to make sure it's a good deal, structure it the right way, If the deal makes sense, I'll fund the deal with you and we can profit share. So guys, if you want to, you can download our free ebook, Distressed Property Investing. It's 100% free, guys. I don't want any of your money at all, period. Just click on the, you can scan out, there's a link below in the description, as well as you can scan on this QR code as well, guys, and download it. It is completely free. It's an actual ebook that we actually created. It comes directly from a masterclass that Cliff and I actually did on distressed property investing. It's the literal notes. It's exactly what it is. The literal presentation. It is 100% free. Didn't cost you a dime at all. So scan on the QR code or look at the description below, guys, and you'll be able to see it. If you're on TikTok or Instagram, go to the link in my bio. It's right there. And also, some folks say, Liddell, I am not a real estate investor, which is fine, but I do want to begin a side hustle. Which one should I choose? Great question. A good friend of mine, Matt Sapala, did a free presentation called The Passive Income Blueprint. He goes over 3 ways to generate $1.5 million in passive income. And again, I say passive income, guys. And you'll be surprised at the one that he uses or he recommends. That would be a good business model to look at. You don't have to accept it. It's free. It's free, but it's simple, guys. Receive the wise counsel, then you make the decision. Guys, you can click on the link below in the description if you're on Rumble or Instagram, YouTube, or you can also scan on the QR code. Guide is right here, or go to the link in my bio, no matter what platform that you're on. It's extremely simple, guys. It's, again, free. It's 100% free. Don't want any money from you at all. My whole desire is to get you in front of the information as fast as possible, because we're in the information age. If we can take you from 0 to 6-7 figures, hey, let's go get it together. Let's go get it. Let's go get it. I don't know what's best for you. Only person that knows what's best for you is you. So it is what it is, guys. So, guys, I hope this was informative. I hope that I added some value, guys. I hope I did. Please give me your thoughts. Let me know if I'm right, if I'm wrong, if you agree, you disagree. It's all good, baby. I'm open to being corrected, guys. Also, guys, every single Friday at 5 p.m. CST, Cliff and I do something called Real Estate Friday Training Live. It is free, guys, on all platforms. Me and Cliff, we walk through the current market analysis. You actually get the blessing of having a licensed appraiser and a private equity and real estate investor and developer, both of us, on the screen. We go through the current market analysis. We then look at a problem that may be causing a hindrance when it comes to real estate investors, and then we give you the countermoves to that thing to where you can actually make 5, 10, 20 grand on a monthly basis, with the goal of you making 6 figures annually in the art of real estate investing, guys. Here's a brief video presentation for it. Here we go. What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refi to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
But you know, I end it every single time, guys, before you leave. And while you can, you see that thing, take that damn picture and give it to your mom and them and say it with your chest and holler at your partner. God bless you, guys. See you next Thursday. Peace. What's good, y'all? The Bugs here. Most individuals that I talk to today, they're really concerned about the economy, specifically the volatility of it. Number one, they're really concerned about inflation. Now, the area of their concerns really centers around the variable of inflation. Inflation right now is really outpacing people's wages, number one. And number two, it's beginning to affect their 401k and IRAs because their retirement accounts are connected or intertwined with the stock market. Over the years, I've been fairly successful in real estate investing. Currently, I own about $35 million worth of real estate under management. And also my partner and I have been able to build our private equity and venture capital firm to about $1.2 billion worth of assets under management. Now, this success has taken place in up or down economies. Now, whenever there's volatility in the market, opportunities begin to show up. There are 3 investment strategies that, if implemented the correct way, any investor can go from 0 to 6 figures in the next 6 to 12 months. Click on the link below or swipe up, and let's talk through these strategies.